All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live for New York session. I'm your host for this morning's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for each and every one of you being here with us this morning as we take a look at the technicals and the fundamentals to see what we could take advantage of in the Forex market. So, without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage right away this morning. If you can hear me loud and clear, give me a little early participation. Drop me a one in the chat. Let me know that you are all ready to go. You can hear me loud and clear, and we can get this morning session started. Reese, I see the one coming in. I appreciate it. Thank you very much, sir. All right. I see the other ones coming in. All right, good. So everybody can hear me. That's key this morning because I got a new headset that I am using. So I'm glad that I am all connected. It's all good. Okay. So let's make sure that we start each and every morning with a strong foundation in the Forex trade room. That means that we take massive action, making sure that we are accepting all possible losses before entering a trade, preparing you for any outcome. We want to make sure that we center ourselves, right? In body, mind, and spirit, ensuring a balanced approach to trading, and that we trust in our education, strategy, trading skills, and intuition. We always want to imagine our trades successfully materializing, and we definitely want to obey our trading strategy, avoiding decisions based on greed or fear. And we want to make sure that we are never looking back or stopping once our trade has commenced. All right. So, hope everybody has had an awesome week so far, right? Not just in the markets, but in life, right? Period. So let's get going. Let me make sure that everybody is all good. Um, get everybody set up. Alrighty. I think we are all good now. Uh, okay. So moving over is taking a look at the Forex factor, right? Yesterday we had ADP non-farm employment change came through. Missed target forecast was 139, came in at 122. Unemployment claims came in positive, right? So the forecast was 214, came in under 214 at 201. So that's good there. We got crude inventories came in at negative 1 million, right? So uh let's go, because I know we've got some oil traders, so we'll go a little bit deeper into that, right? So I've got some notes. I'll post them in the chat after we're done regarding the Fed meeting minutes that came out at 2 o'clock yesterday, right? That was a lot of investors were waiting on that to kind of get an inside track on where the Fed may head. I think we already pretty much have a good idea so far, right, coming into the new year in regards to the amount of rate cuts, but just to kind of get a get an inside track on what they all were thinking and what the minutes had to say from the last meeting they had. So we got a lot. So what we'll do, let me switch over because I've got some notes, and we'll actually start with that, and then we'll talk about um, the inventories, the crude oil inventories. We'll go a little bit more in detail uh, regarding that. Okay. So let me switch the screen here. And go over to screen two. All right. Can everybody see my notes? Yes, no?
Yes, sir.
All right. So just um just to go over briefly like the Fed meeting minutes. Um so Fed minutes reveal cautious stance on further rate cuts amid elevated inflation concerns, right? So we came out of 2024 um kind of right on the same on message, right? Just knowing, hey, we've got a new administration coming in, right? So just to go into the notes, December rate cut, Fed reduced, right? As a reminder, interest rates by 25 percentage points. It's the third straight cut that signaled a slower pace of future cuts, right? And we saw, the markets take a dip as a result. Here, need for caution. Officials cited strong spending, persistent inflation, and a robust job market as reasons to proceed carefully with additional easing. Okay. Policy split. Some policymakers wanted to hold rates steady, highlighting concerns about cutting too aggressively. So even in the December meeting where they cut by 25 basis points, you had some policymakers that thought that they should hold rates even at that point and not make that third cut. Okay, so economic assumptions, placeholder forecast for incoming President Donald Trump's potential policies affected the Fed's growth and inflation outlook. Right? And so we said that was going to be a big deal, right? The reelection of Donald Trump and his high growth, high inflationary policies that he had put on the table, what he like part of what he campaigned on, was going to be a challenge for the Fed. Okay, so fewer cuts in 2025. Updated projections show fewer expected cuts next year. That's this year, the year that we're in. Contingent on seeing more evidence that inflation is moderating. Okay, so um, we know that we've got that the market is kind of on hold, anticipating, waiting on the inflationary reports that are coming out next week for the United States, right? So that's going to be important. So pros and cons, right? Um, the pros: controls inflation, slowing rate cuts could help contain rising prices and protect against overheating. Okay. Signal stability. A measured approach suggests the Fed wants to avoid abrupt policy shifts, providing confidence to investors. Okay. The cons in this approach, right? Possible slow growth, less aggressive cuts to reduce economic stimulus, potentially dampening spending and hiring. Okay. So again, possible slow growth, less aggressive cuts could reduce economic stimulus, potentially dampening spending and hiring. Okay. So we can automatically, right? So if you have a president coming in with high growth policies that could lead to higher inflation, and you have a Fed that's taking a more cautious approach, right, with less aggressive cuts, you already have an issue, right? You already have an issue, right? I remember the last time when Trump was in office, he had an issue with Fed Chair Powell because he wanted him to cut rates more aggressively. Think about where we would have been, right? If he would have went and moved to cut rates during that time period, okay, that was going on, COVID, everything else. It's been a mess, right? So thankfully, right, the Fed is technically supposed to act as an independent body, and they stay pretty independent in that regard, right? Which ultimately was the right move. Okay. So policy uncertainty, divisions among Fed officials and unknowns about the new policies may create market uncertainty. We talked about it a lot. Okay. Uh, that the market doesn't like uncertainty. All right. Doesn't really like it, right? So you see a lot of back and forth, a lot of sideways movement in the market, some of your indices, things like that. You see it kind of ranging on some of them. This is part of the reason why. Okay, but January 20th is close, which is when he'll President Trump officially take office again. So we'll see what happens. Any questions on the Fed minutes? No? All right. So hopefully, right, we'll try to really delve into these fundamentals deeper, more on a regular basis. I know I like it best when I can kind of really, really dumb things down, make it easy to understand, get beyond all of the sometimes what seems to be the coded language, right, and really get down to what does it really mean. Uh, Not only for me personally, in my own life, but just as a trader, as an investor, right? So anything we do to help you guys out with that, that's what we want to do. So let's talk about the U.S. inventories, oil inventories, right? We got oil traders, we pay attention to it. It is a key fundamental read, right? Watching oil prices and things like that because it impacts right? So much, right, of what we do in our own lives and then as traders and investors. So, uh, U.S. oil inventories dropped to decade low at Cushing as fuel stocks surge, right? So we got oil inventories dropping, fuel stocks are surging. Okay, that's the headline. So, crude stocks dive. Inventories at Cushing, Oklahoma hub hit their lowest level since 2014, falling by 2.5 million barrels to 20 million barrels. We got a nationwide drawdown. Total U.S. crude supplies declined by 959,000 barrels to 414.6 million, surpassing analyst expectations of a 184,000 barrel draw. Fuel inventory soared. Gasoline stocks jumped 6.3 million barrels, while distilleries, that's diesel, heating oil, rose by 6.1 million barrels, fueling concerns of potential oversupply. Refinery action. Gulf Coast refiners increased net inputs to a 6-year high, running at 93.3% utilization. A ramp up in refinery maintenance could lead to higher crude yields soon. Import spike. U.S. crude imports surged, notably Canada amid speculation of incoming tariffs under President-elect Trump. Right? So somebody tell me, anybody, right? Why we've got President Trump coming in and tariffs. So why do we see, right? They're speculating, right, of the tariffs. So why buy the oil now? Why increase the imports now?
Because of retaliation in price.
Yeah, right. So your price could be higher later, right? So if I'm anticipating tariff war, things like that, Trump, all the tariff talk, I'm gonna go ahead and I'm gonna import more oil now at a lower price as opposed to later when that price could be higher as a result of President Trump's policies. Right? So things to think about. Always thinking ahead. Rate cuts, broader economic conditions remain influenced by recent Federal Reserve cuts, potentially impacting consumer demand and overall energy consumption. See how it all ties together, right? So we were just talking about the minutes, Fed meeting minutes and interest rate cuts, or the potential for less cuts, and look how that leaked right into right the oil inventories. So it impacts things across the board, right? So you have to pull it all together. So let's look at the pros and cons. Okay, the refinery boost, higher utilization rates can support domestic energy production and potentially stabilize gasoline prices. Potential relief at Cushing. Market watchers expect stock price to rebound once refineries enter maintenance, easing supply concerns. The cons. Volatile oil prices, historic lows at Cushing, and surging fuel inventories can lead to price fluctuations, challenging producers and refineries. And then here, the tariff uncertainty, speculation of future trade policies. Hold on 1 second. Future trade policies may disrupt import flows and pricing structures. So, simple explanation, right? Really dumb this down, right? You heard him talk about Cushing, right? For some of you, that might be the first time that you heard about it. Okay, so very, very simple, super simple. Think of Cushing like a big oil pantry where the U.S. stores a lot of oil. Easy to understand, right? Right now, that pantry is almost empty, the lowest in 10 years. Meanwhile, fuel like gas for cars and heating oil is piled up. Some people worry an almost empty pantry might be bad, might be bad later if we need more oil quickly. Okay? On the other hand, having lots of fuel can be good because it might keep gas and heating prices steady. Okay? So good, we have lots of fuel ready to use. Bad, if we run out of oil, it could be a problem later if we need more in a hurry. All right. A lot of the drain, what I was reading in some articles for that oil pantry, has to do with end of the year tax situation, right? So to why they drained it the way they did, and not so quick to stockpile it right away. All right, so there's some tax implications and things like that. All right, so also Long has a new contract coming. Yes, LNG for sure. So I'll post those notes in the community. Hopefully, it helps a lot of you throughout the year and just gaining a better understanding of fundamentals and how they play a key role, right? So it's not just all technicals, right? We want to make sure that we get a sound understanding of the fundamentals and what it means, right, and how it impacts markets and how it's related to other parts of the market. And we may not quite understand that part of it, but it all connects, right? So everything impacts everything, whether we like it or not, right? So that's that. Any questions um, over anything that we covered there with the Fed meeting minutes or oil? Nope. All good. Nope. All right. Ryan, good morning, sir. How are you?
Good morning, bro. I'm doing well, man. How about yourself?
Doing pretty good, man. Glad to be here. Glad to be here.
Absolutely, dude.
Close out a busy week, man. What's going on your way?
Yes, yes, yes. Um, Not too much this way, man. Um, I was just digging through. I didn't get a chance to dig through the meeting minutes yesterday, so I appreciate you going over those details. Um, Outside of that, not a ton right now, man.
All right. All good. All good. So again, everybody, the year is just getting going. You know, after being in this for a while now, I have grown extremely patient, waiting on my spots for the market as a swing trader. That means I have to go a week or two, before I take a major position. If that means that coming out of last year, hey, I'm going to close out some ideas and take a slight loss, waiting on the new setups to occur. So to make sure that I don't have unnecessary capital tied up, then I definitely do that nowadays. Back in the day, not so much, didn't really understand it, but now I do, right? So that's that. Now Thursday, uh, today we don't have a whole lot. We've got man, no red folders or anything, but we do have a lot of FOMC members speaking today, right? So you never know what could come from that. So we'll keep a close eye on it. And of course, the market may be on a little bit of a pause. Again, like I said, next week, anticipating major inflation data for the US. But then tomorrow, right, we know first Friday of every month, we've got US non-farm payroll data, right? That's going to be your first one of the year, always very important. And as often what occurs, we also have at the same time tomorrow employment data coming out uh, for Canada, right? For Canada, the country that President-elect Trump suddenly wants to take over. So we'll see what happens there. But big day tomorrow, big kickoff uh, tomorrow. So we'll see what happens there. All right. Moving over, taking a look at the dollar index. Dollar index remains steady around 109 on Thursday as investors continue to assess the outlook for the Federal Reserve monetary policy minutes. We talked about that already. Um, the dollar also received support from reports suggesting that Trump is considering declaring a national economic emergency to justify broad tariffs on both on both allies and adversaries. On the economic data front, the ADP showed that private sector employment fell to a 4-month low in December, signaling a potential cooling in the labor market. We'll see if the non-farm payroll comes in line with that, right, or not. Investors are now focused on Friday's and payrolls, right? We talked about that for further insight. So uh, again, um, oh, I know. He said he said the Gulf of America, and he wants Greenland too. So you know, I don't know. It's crazy. that's a whole hour-long conversation in itself. But people think he's nuts and just just talking wild, but it's actually very strategic and not in such a good way either, especially when it comes to Russia and things like that. So he's really saying that stuff for a reason, Russia and China and everybody else. So we'll see how that goes. I know a lot of people are laughing at it right now, but he's dead serious, dead serious. So taking a look at the DXY, right? Yeah. And I know people aren't, you know, people might be laughing at it now, but people never thought he was going to get reelected either. So a lot of people. So taking a look at the DXY from the daily, here we are, resistance level here at 109.56, looking like it's trying to right move back to retest that 109.56 level. Um, I know, I know. Yeah, I really feel like the reelection was a major his reelection is a major turn. So it's definitely significant. Um, Especially when you look at who's lining up to back a lot of billionaires and things like that. So there's gonna be some issues with it. So get your popcorn ready. 109.56 there. Um, because look at the Wandosa, look at the if it falls in line with what everybody's looking at. So when you look at the way it's measured, look at the price point there, the price difference. You see at 109.56, that falls in line. So this is the proper one that we want to be looking at. So even I don't trade the DXY itself, you know, when you look at when you go back and look at the US dollar and then look at your USDX, this is your real price right there, right? So technically you're going Yep. So technically, you're gonna see the same price action, which is really all I care about on this index. But just to make it fall in line with everybody, because some people use TradingView, other platforms, and this is your proper price at 109. So it's just priced a little bit. The price the price is recorded differently, right? So we're gonna put this 110. Because we definitely know. Um, that can move there, right? And so look at that, right? So you can see clean where the dollar really doesn't want to go below, right? So you know for the distant future, we know that it doesn't like to go below 100. You see that, right? How that just sat there, like it hit 100. It's been moving up. It's been a bull ever since, right? So that's where we are on the daily with the DXY. Here's our 4 hour swing. Okay. Here's our 4 hour swing there. So it's moving long. And so you can see that 110 level that we marked, right? That's right. That's right at the 1.618. We got a deep correction there. So we'll see what happens when it gets to that 118. Of course, we know this fib to deactivate, but we'll see if we get in line for a correction after it breaks through that 109.56 level and hits that extension. So that's where we are on the DXY. Moving into taking a look at our main indices here. Okay, so we can see the this S&P, how it's just struggling, right? With sawing back and forth. I don't know where my fibs go on this. Looking at this 4 hour. Let me go. I see what happened. I'll be on my daily chart for this. There we go. All right. So right here, this is the look. Okay, we've got our daily stochastic back in the buy zone, but you can see how we're just range bound. Right? So the market is telling us that there's uncertainty. No need, right? It's just a lower time frame trader. I get it. But other than that, looking for those smaller setups, there's no need to, uh, at least in my opinion, right, to have to get involved in this right now. If you've been involved in the S&P, you got positions in, like I do, have a small position in, not a full position coming into the new year, and it's really just bouncing around, right? But take a full, you know, position on this right now with the way it's moving sideways, right? Moving right across the middle of our screen. I don't know if that's the best idea, right? When we could break these levels and move lower, right? On a daily, but we're pretty much just range bound right now on the S&P. So not much doing. It is hanging around that 58.43 level. Hasn't gotten below that yet, but it doesn't have a lot of momentum either, right? And so we'll see what happens with non-farm payroll. Uh, I know that the eyes are really, really on that inflation data. That's the narrative coming into 2025 because everybody's trying to see, especially investors in the stock market, are trying to see if there's going to be any data that'll lead to the Fed to possibly change that their most recent projection in regards to rate cuts, right? So last year we were thinking progressive cuts four for the year. Got towards the end of the year, they said, hold on, we may only see two. And we know the market didn't like that. So gotta control inflation, gotta keep that genie in the bottle, right? Once we get it completely under control. So this is why you see this sideways movement on the market. Any questions on the S&P?
No, sir.
Nope, no question.
All right. All righty. So moving on. What is going on? Not sure of my. Not sure. I'm not getting why it won't go back to the rest of my screen. Looks like I'm having some. Everybody's charts okay? This is just me on my end. We got issues with charts loading. Yep. Anybody else having an issue, or is it just on mine?
I'm double checking that one right now.
Yeah,
Mine low. Let me go back to the daily. Yeah, mine is loaded.
mine is loading,
Mm-hmm.
so it must be on my end. I wonder why this is doing this. Because I've got full bars for my internet.
Oh, I was getting a message the other day saying that it was hackers on the site. So it'll load.
What?
Yeah. That's what my firewall brought back when I was loading it up. So I don't know if you got Norton or not, but it'll clear up and once they finish it'll load up. Yep.
Let's see if that did the trick. There we go. All right, we're back in business. I was going to say 'cause I got a lot to do today on these charts. So, okay, appreciate it, Joy. All right, Joy is on it. All right, so let's take a look at the US 30, right? On the 4 hour. This is one of them definitely paying attention to, right? As we've got to move back to the downside here on the 4. So what I want to do, I want to see, right, if this is gonna hang around or we're gonna continue to see uh a move back lower, right? So let me move out. Oh, just took that level out. Let me move out to the daily because there we go. Just to get a look at the daily correction that's occurring, right? So we're coming in right at a 382 from the daily, and we're kind of just stalling, right? So a deeper correction of what we saw in the S&P, and we're just stalling. So stochastic is back in the buy zone. We're at a 382 level. We haven't quite made it back down to those previous support levels, but you can see it here. Right, so kind of just range bound as well. So just staying patient, right? We see how choppy it is. We do have it does represent a deep correction on on that 4 hour chart. So we need some volatility, right? We need to move out of the uncertainty zone. And that, like I say, may see something tomorrow. You may see something more so next week with the inflation data to get a response out of the market. And then just keep in mind, you got a new president coming in office, but that's not until January 20th, right? So we'll continue to see. So that's a wait and see on the US 30. NASDAQ 100 4 hour chart, you kind of see we're just in the same situation. So just be patient. Don't be so quick to make that move, because what this is telling you when we see that is it can go either way, right? It can go either way. So I don't want to get caught up in that. Just wait. The market will tell us. The market will tell us, especially if you like trading, you know, uh, take this off. Just delete it. If you like trading, you know, 4 hour charts, which is a strategy like the break of the cloud with the C to D moves, right? We're just moving sideways right now. So we would need, you know, a really nice break and for that momentum to really get going in that upward direction, right? So if you need something, because this is what I do oftentimes, if you need something to help you, you know, uh, stay patient, hey, I've got a 50 and a 200 moving right through price. I've got the cloud moving right through price. This is clearly just consolidating right now. But once, uh, once you get that clean break, right, and we get that higher high, higher low, then, right, we may be willing to take that trade. So just sit patient. Just sit patient. Any questions on the NAS 100? No, no. All right.
Nope.
So it's a waiting game. All right. I got you. So here we are. Right. This has been one for a while, but you can see how it just keeps moving up and correcting. Right, moving up and correcting. Really falling in line with the uncertainty in the market. This is the Nikkei 225, or the Nikkei, as some people call it. So you can see that it's ranging, it's ranging, but you can see how it's slowly trying to close in on that target, At 41,387, we've had that mark for a while, but it's struggling, right? Back and forth in the range. But you can see how it made that move, right? Off that daily level in between that 50 and that 61.8, and it made the move up, right? So again, market's just indecisive right now. Um, Taking a look at the UK 100 though, right? Where in that range, right? This is from a while ago. We got that price to break that trend line, right? And so this is more so just a range play off these levels, and it is moving higher, right? It is moving higher. So that was getting some momentum, at least moving back up towards the top of the range, right? So this one was a weird one there, right? So how it just bounced, and I don't know. Let me see. Yeah, that's why I kept it as a range after it made that crazy move and went straight to the D extension. Kind of just left it alone. So this one here, right, is just simply put, right, we have a range. Right? It's a large range, right? Bottom to top, top to bottom. Okay. But there was a play there off the lows at right at 8,000. Look at that. Right at 8,000 even. Nice round number. So we'll look to see if we can continue to get higher highs and higher lows, right, moving forward. Okay. So we didn't get a deep correction there. Okay, 1 hour, you probably did 1 hour chart. So that one seems to be moving up to the top of the range. Um this is just this is IWM here. So just moving sideways like what we saw with the broader market. We got the German 30 here, right? New AB boundary. So that target was hit, right? Been a minute since I went back on that one. So that ABCD wave completed, right? As wild as it looks, right? 80-20, and then made the U-turn. Now we got a new AB boundary on the 4 to the GR30. So of course we will want to see a deeper correction before we look to buy on that. Okay. Moving down, this is just SMA semiconductor ETF continues to be range bound, right? Continues to be range bound. But I've got faith, right, in the semiconductor industry. Right? So I definitely look forward to seeing that moving higher. This is a daily chart on SMH. Okay. Moving over to taking a look at commodities. Okay. And we take a look at oil and how it climbed out of that range that we had. And so we'll see if we can keep that bullish momentum, or you know, we'll watch that inflation data next week, right? Because we know that higher inflation leading to the Feds holding rates and not continuing to cut rates can lead to a decreased demand, right, for commodities. But as we know with oil, there's a lot of other stuff we have to pay attention to globally. So we'll continue to watch it. But where's my, I'll leave it alone for now. Just look at these levels, right? So we have been moving bullish, right? And so, Joy, anybody, what do you got? What do you guys think on oil?
After that information from earlier, depending on demand, um, but with a lot of the forest fires and
Hmm.
I don't think a lot of people in the South is driving because they can't drive on ice. Um,
Right.
that was a low ball. My bad. Um, I don't I see it being stagnant until
Yeah,
Trump getting in office.
yeah, yeah. I think so too, right? Too much uncertainty out there. So we'll see. We'll see what happens, but he definitely broke that range. We're above, what is that, 72.58? We'll see if it holds, right? Does it test this level as support and continue and continue and continue to move? Let me, a lot of people trade this on a lower time frame. So let me move it on down just to kind of get a better idea of where we are. All right. We'll see if we hold above that 72.58. Almost tried to hit that D extension on the one. So we'll see. We'll see if it holds above that level. Makes a U-turn. Don't know. But that's where we are on oil. Right? Everything's kind of choppy right now.
If it do get above 75, because I
Mhm.
believe that's where the 200 is on the daily.
On the daily,
Yep.
above 75. $75 a barrel. All right. So we'll see. Where's that on the one? As a matter of fact, where's that? Yeah. So that makes sense because it's already above it on the 1 hour. So you see at 75, 75. Yep. I'm gonna mark that.
The other thing came from the quant box. The quant box had it projected to 76.8, which it looks like that was your weekly double. So that's what it was projected to.
Like 76.
That's 76.8. Yep.
Okay. Gonna be interesting. It's definitely made some good progress off the lows. So definitely is a good buy at the bottom of that range right here. Been moving along ever since. So let's see what happens. So that's where we are on oil, gold. Right? Continuing to work his way up. Hey, we know gold. Hey, if there's some uncertainty, right? We know people can stockpile gold. So still it's moving higher, right? Moving higher. So we'll see what happens, right? That was a good break in the retest there, right? So I'm gonna go let me just move down and track this latest move higher, see where we are. It's off the lows there. Man, anybody long? Anybody long on gold?
Nope, I jumped in too soon and I got taken out.
Yeah, taken out. I wonder
Yeah.
if this is sub or is that legit? Yep, so that's a legitimate one here on the one.
That wick right there took me out.
Okay. So off this 1 hour chart, 2,700. Let's see what happens with non-farm. We know we oftentimes can get a move on gold with non-farm. So let's see what happens on this. And it's a nice even number too, 2,700. I wonder if it gets back there. So let's see. Let's see what we go to commodities. See what they have to say. Held above 26.60 per ounce on Thursday, maintaining recent gains. Investors continue to assess the Fed's monetary policy. Latest FOMC minutes for central Trump policies. Sustained price pressures. Central bank also signaled. Meanwhile, gold found support after a weaker than expected private employment. Yep. Report for December reinforced the notion that the Fed may need to adopt less cautious approach to rate cuts Elsewhere, physically backed gold ETFs saw their first inflow in 4 years, led by Asia, with North American funds recording their first positive annual flow since 2020, and European outflows narrowing compared to 2023. So you got more inflows, and then European outflows contracted, according to the World Gold Council, right? So this here is something that we should note. What is the World Gold Council? What type of information do they put out there on a regular basis that we can grab a hold of, right? That can help us gain an edge when it comes to gold, right? So it says, according to them, how often do they put out the data, right? So these are things that we should pay attention to. So World Gold Council, right? Anybody familiar with that?
Not gonna lie, never heard of it.
Nope.
Right. Either. So let's play it. Let's figure it out. All right, let's figure it out. Let's start communicating right in this think tank. Drop some links, do something, do some research, find out what it's really about. Maybe there's not a whole lot there, but they definitely brought it up in this article. So let's see what happens. Right? Because physically back gold, we're talking about inflows, outflows. Obviously that's important, right? Because this is the clean C to D move. Clean C to D move that's taking place. All right, so we could definitely see 2,700 on it. All right, so maybe it's looking to move back to the highs where we had this double top. So 1 hour chart, that's no small play. Right there. And I'm sorry I missed out on that one. One thinking about it at the end of the year though. All right. Anytime, right? We get that deep correction that we like, it's gonna go back below the cloud. This, right? But for the cloud users, when you combine it with the fib, this is your money right there. Right? So allowing it to hit that buy zone, if you wait for the break, that's your money play right there. Right? That's your play. Does it require for you to be patient? Yes. We talked about it doing our ritual. Choose your chart. And the community appreciate it. Thanks, Ryan. Right? That's your money right there. Right? So here we are looking at silver from the daily. That's making a move too. Right? This is your daily chart. This is where we are, right? We pretty much double bottomed at the 382, right? So if we just zoom in, right? Again, looking at, those swing lows, those swing highs. Can I move to my lower chart to make a play, right? Then you just come down, we'll drop down to the 1 hour. That'll be our chart today to see what's going on, to see if we can get involved, right? Still staying within your fib principles, right? So using your fibs, right, and sticking to that framework kind of calms the storm, right? When things seem to be a mess, right, it can bring you back to center to say, okay, where's my wave? Okay. Mhm. So that's trying to move higher. So in your 1 hour, right, shorter term play, we pull back. Right? So do we get back to what is that, 3097? Right, we'll call that 31. right, so we'll leave that there. All right, call that 31 within that range, and we continue to move higher. All right, so we know the major play that we had last year was silver to 34. So we know that it can move back that high, right? So just setting up, right? So we'll see. It's just January. Let's see what happens. But right now, that's your 1 hour move on silver. That gas is ranging now after hitting the D extension. Makes sense, right? And so that was the 4 hour fib that we were tracking. Is no longer highlighted, but that should be that's not right. So we've got, and I'll go back on this and rework it, but top down. But that clearly was an ABCD wave that was completed. Maybe I need to work my fit further back or something, but I'll look it up. But moving sideways right now, kind of just ranging. So we'll continue to keep an eye on that gas. I definitely like it long though. Right. And then this is your GDX, right? For gold, your ETF, that's making a really nice U-turn. Okay. And so we saw on the other gold chart that gold is getting long. So that's looking like it's wanting to make a swing within that AB boundary. This is the daily too. This is the daily chart. All right. So that's GDX, right? So definitely, so it's cool to actually see the asset, to see the indice, and then look at the other, ETS or other products that actually track that particular indice because you could do some good compounding. You don't want to be, over leveraged per se in one particular asset, but it is a way that you can kind of diversify and compound a good price action on a particular asset, right? By tracking not only that asset, but other products that track that asset closely or is closely related to that asset, right? So uh that's that. There was look at these Aussies. I wanted to just show, right? So I want to double back on this Aussie NZD because it's continuing to move, right? So when we looked at this over the weekend, it's continuing to make higher highs and higher lows. So watch out for that one. That one looks like it wants to push. That's that 1 hour play that we were looking at. And so that's definitely right now the way that's tracking to move to that 1 hour extension, and then we've got some levels higher than that. So that's continuing to make a good move. That's good price action there. Wanted to um, this ASEAN is still dancing around retesting, but we did get a break of the cloud, right? We'll see if that wants to continue long, but that one's been a choppy one. We know the Aussie hasn't been the strongest right now, right? So to speak, this Aussie CAD is still kind of holding below that level, right? So we don't have any type of break yet for that possible U-turn. Anything else that any of you want to take a look at before we close out? I know I spent a good portion of that first half going over some key fundamental data. No?
Did you
All
look
right.
at the S&P?
I did. I did. I did. I can go back take a quick look at it real quick
Yeah.
for you. No, it's okay. Um yeah. So this is where we are right here. Kind of just hold steady. Not doing a whole lot. We'll see if we get any type of movement out of it tomorrow. with non-farm and the employment data coming out. You're welcome. Yeah. Ryan, anything before we close out, sir?
No, sir. Great session, bro. I appreciate taking the time on the education piece this morning.
Oh, no doubt. All right, everybody, that is it. I will see everybody. Remember, today, Friday, like pretty light day fundamentally. We got a lot of FOMC members speaking, but I'm pretty sure it's going to be on various topics. Um, but you never know. Uh, Beginning of the year, we've got so much going on, wildfires, everything else. So even though it's a light day on the Forex factory calendar, you never know what's going to happen. And then we've got non-farm payroll tomorrow, which is gonna be pretty big. All right. So that's it. Hey, everybody, enjoy the rest of your day. We'll see you tomorrow morning, 6:30 a.m. Eastern Standard Time for the pre-New York session. Bye for now.
Thank you.
You're welcome.